from a college dorm to becoming the poster child for successful startups in India, the OYO journey is nothing short of inspiring. This Ritesh Agarwal founded company has revolutionized the way in which stays and hotels and accommodation in general is being looked at. What started off in a small way has completely taken the industry by storm, wherein OYO has primarily focused on creating affordable stays for travelers across India, and their expansion is truly something that has inspired many. But three times in 2021, then in 2023, and once again in 2025, OYO had to face the bitter taste of delay. And the question is why? If OYO has been such a strong, successful entity, which basically is the aspiration for so many of us who want to set up something of their own, then why has the company suffered continuous delays when going for its initial public offer? Now that is something to ponder about. To know more, please keep on following the video. Before we dive in, let me introduce to you Plutus Education. Plutus Education is a one-stop shop for all the finance and accounting courses, be it ACCA, US CMA-US CPA. If you want to get top-notch training and guidance by expert mentors, then Plutus Education is the place where you have to be. And to know more about Plutus Education, please log on to www.plutuseducation.com. Ritesh Agarwal started OYO back in 2013, and from that point onwards it has only been an upward journey, inspiring to so many of us. As we speak, the company is valued at a staggering $9 billion, a number that many of us would have to sit down and count the zeros for before we say this is $9 billion. So what exactly have been the holdups? Let's go back in time. Back in 2021, before OYO wanted to go public, there were certain concerns about market conditions and the quality of earnings, and which is why the IPO was pushed. They tried again in 2023, but again concerns over quality and sustainability of earnings and corporate governance issues pushed back the IPO. And even for the third time, when they were eyeing an initial public offer in the month of October 2025, SoftBank, which is one of its prime investors, has decided to delay things a little. And why is that? Why is a company whose valuation is a staggering $9 billion repeatedly getting delays in terms of getting its company listed on the stock exchange? Well, the buzz also is that if the company doesn't go public, then Ritesh Agarwal and OYO will face a lot of pressure in terms of servicing the debts, as quite a few payables are maturing at this point in time. Now, the investor SoftBank is willing to step in and ensure that the debt repayments are also done and the company is back on its track, but it is insisting that the company's financial position has to improve before it can actually go for an initial public offer. There has to be a better quality of earnings, and the sustainability of earnings is also a prime focus for OYO at this point in time. And what exactly does this mean for OYO? OYO now has to go back to the drawing board, revisit its strategies, change its cost structure, and make sure that the company is profitable in a sustainable and sustained manner. At the same time, it also has to work on several of the corporate governance issues that it was facing and still continues to face at this point in time. And while this delay and all of this is, doable, all of these changes are very much doable, the only challenge at this point in time is that the investor confidence and investor patience is being tested. With repeated delays, the investors are now getting quite impatient, because the IPO has been in the making right from the year 2021. We stand in the year 2025, and there is a third time possibility of the initial public offer getting delayed. Now, with eroding investor patience and eroding investor confidence in the long run, it might be difficult for OYO to fetch the price that it once thought it could fetch in the market. Well, the IPO market has evolved. Growth alone is not what investors are looking at. They are looking at sustainable earnings, they are looking at good corporate governance, and the market conditions also have to be right. Gone are the days when the market would pump all its confidence and money in tech-based startups. Right now, everybody seems to proceed with a lot of caution, and rightfully so. The OYO IPO journey has quite a few lessons for all of us. The profitability versus liquidity trade-off. What is the quality of your earnings? What kind of a cash flow position are you in at a particular point in time? Corporate governance issues, which earlier might have been brushed under the carpet or which never got that importance, are now at the forefront, and these points are being considered before taking the company to the next level. Investor confidence and investor patience both are key. You cannot keep on pushing the deadline again and again, lest it should result in erosion of investor patience and ultimately the company not getting the value that it thought it would get. Debt management is critical. You cannot have a debt heavy balance sheet and not have enough cash to pay off the debts on time. And the timing of the market is important, in the sense, when exactly are you launching your IPO and are the conditions conducive for that sector? Will OYO actually be able to make its IPO live? Only time will tell. But this is a lesson for all of us that it's not just profits or it's not just growth in percentages that everyone is looking at. There are a lot of other factors that are equally critical, equally crucial, and all of them are together impacting the overall growth of the organization, and taking it to the next level depends on how well you manage issues like market timing, debt management, cash flow management, corporate governance, and sustainability. Ritesh Agarwal's vision about creating an impact in hospitality. Ritesh Agarwal's vision of a tech-driven hotel industry is compelling, and we are all rooting for it. But it is the execution that will define whether this can be taken to the next level. If you liked today's video, please press the like button, leave a comment, and press the bell icon to get more such interesting videos from Plutus Education. Please follow us for more such interesting content.